Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for tomorrow, which is Wednesday, the 9th of July, 2014. Rich is off tonight, so I'm doing this for him. Charts, as usual, brought to you by eSignal 11. As usual, if you find the information in this video useful, please like us on YouTube or like the video. Here's a look at the ES. This is the S&P E-mini futures. This is the front month contract. We did have a sell signal, as Rich elaborately pointed out back late last week, and tested the risk line and could not get through. Note that the last blue, white bar up that tested the pink risk line that you see here was the half day on Thursday, so there weren't really any sellers or traders around anyways. Stalled out and started to come back Monday, and then picking up some speed to the downside here on Tuesday. Keep in mind, this is really nothing. If you draw a variety of trend lines from the low in April through May and June, we're really still above the trend line. So even though we have rolled over and it was a sharp down day, this is nothing yet. And keep in mind that it looks like we're going to get a broader directional shift here in the market, at least something that could pull us back to that red static trend line, perhaps down there around the 1865 area, which is almost 100 points back at this point. So that's a decent pullback. It doesn't have to turn into a crash in the market to be a downside reversal after the move up we've had. So we'll be looking for that, see where that takes us. But we start out with today, which was a better trading day, and from a volume perspective, 2 billion shares traded on the NASDAQ, which is good. Here's a look at the NASDAQ side, which dropped 47 points. It's a bigger drop, obviously. Also had a sell signal there last week, as Rich pointed out over the weekend. There's a lot more room here. This is the NASDAQ NDX 100 index, currently sitting at 3864, and the static trend line from this last move up takes you back to about 3564. So that'd be 300 points on the NASDAQ, about 10%. But again, that's just doesn't have to be anything horrible to the markets or the economy when something like that happens. That's healthy. It'd be good to get those types of pullbacks occasionally. And on the downside, we tend to move a little bit faster once we get moving. People start to panic a bit, which makes for better trading opportunities for us. So I'm looking forward to that. But so far, all it is really one big day down, and that's it. Certainly the signals are there for a bigger move, but so far that's it. Now, how does this really work? Well, when we see the volume that we saw today, really up from the 1.5 billion we've been seeing on the NASDAQ almost every day to 2 billion today, so a 33% boost as the market sold off almost across the board. I mean, everything red on my screen. You can basically tell that the institutions are selling, and keep in mind that we just started and the third quarter of the year, the second half of the year, and we had a couple of days of light activity to start because of the holiday last week and the half day on Thursday. So this is really just the beginning of the quarter of trading, and it looks like they're coming in selling, which is perfectly fine. Again, here's a look at the, let's look actually at the NASDAQ futures here real quick. You can see what they did in 5-minute bars. You can see we got a little gap down here on Tuesday, and we just kept going. All the way until lunch, boom, straight down. Didn't even really set up any futures trades. It went so quick. It was just stock trades that we had that were triggering, and we were on a roll today from that perspective. But again, you just stay on the short side. Keep in mind, you do not want to be fighting the institutions. The volume tells you that look at the volume at the bottom of the screen, how big the volume was today. Volume tells you what's going on. Okay, the bigger players are selling, and this is just the start. So do not spend your time fighting the tape on this. If the market is heading down, stay on the short side. Here's a look at the ES, the broad market futures. Also sold off for the session and early, and then came back a little bit and got glued to the middle area. The afternoon wasn't that exciting, but that's okay. But again, if we look at some of these bigger stocks, even Apple, which tried to start the day out green, okay, and then sold off. See, Apple was up early and then sold off pretty sharply as well. You take a look at something like Google, was selling off right from the open. And again, everything kind of bottoming out there right around noon Eastern time. Here's a look at Tesla that sold off. Here's a look at Netflix. I mean, they are selling everything right now. Netflix down big for the day. Amazon also off. So the big key here is don't fight the market, okay? Now, this doesn't mean they're just going to sell every single day for the next 2 weeks. Here's a look at oil, by the way. Closed about flat at 103.50. Nothing new there. But what it does mean is what you'll see is a couple days of heavy volume and selling. Then suddenly the market will kind of bounce back. I mean, it could happen even tomorrow. But there probably won't be as much volume on the moves up, and that's because the bigger players are letting the market fade back up so they can come back in the next day or later that day and sell again at higher prices. Remember, for the bigger players, it's all about positioning. It's not about just day trading. So they're trying to get out, and they can't just do it all in one day. And it really feels right now, from an institutional perspective, like there's some selling to be had for the next few weeks. Let's talk about the general shape of the market. We are about to enter earnings season in another week. That's obviously a telling period about the future of the economy. So maybe there's some signs internally that people know about that things are going to slow down a bit. We'll see. At the same time, August is one of the most positive months of the year on average. So if we sell off here in July, maybe we get a little bounce in August. A lot of people usually gone in August, so it's not because there's heavy volume. It's just kind of a float. The big professional sellers go away and the market floats back up. September tends to be one of the most negative months of the year. In fact, it is the only month of the year that averages a negative return in the markets. So again, if we sell off in July, maybe come back a bit in August, they sell it again in September, that sets us up for what is usually the low for the rest of the year in about middle of October, commonly happens, and then you kind of move back up from there. So we'll see how it goes, but it depends how much velocity this move gives us over time here to the downside. So we'll be looking for that. We'll be calling it as usual, but again, do not fight. Do not be fighting the tape. When you're getting heavy volume days to the downside, do not be fighting that. That is going to get you killed as a trader. We'll try to keep you on the short side. We'll see you in the Tradesight Trading Lab. Have a great week. Have a great rest of your week. Have a great Wednesday.